Hello, good morning to all, and welcome to today's daily dose of market insights by OANDA. This is Kelvin here, the senior market analyst of OANDA Asia Pacific. So happy Friday! We finally came towards the end of the week. So today is Friday, 3rd of November. So before we start our daily dose of market insights, let's take a look at the disclaimer slides first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, no financial advice or recommendation for any investment product. And any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so with that, let us take a look at the key things that we tend to cover in our daily dose of market insights, which is those who actually join us for a 2 months plus. It will be a recap of key highlights and events that took shape yesterday. What are the data to look out for today, and as well as the short-term technical outlook on the various asset classes ranging from FX, the broad-based stock indices, and as well as commodity markets. So occasionally, most of the time I will share oil and as well as gold, because these are the two key commodity markets that market participants are actually looking at, right? So with that over here, I think the screen is not moving for a while. Let me make sure that the screen is actually moving. So I'm not sure what's going on. Okay, so let me move my screen for a while. I think the screen seems to be freeze at the moment in time. Okay. Okay, so I think should be all right now. Yes, the screen is finally moving. Okay, so basically, right, what we have yesterday was actually the dollar continue to actually shape a decline, the dollar setback. So that is pretty much in line with the residual, we call it optimism after Fed Chair Powell press conference, indicating that potentially there could be a chance of a further rate pause in December, because due to the fact that the 10-year US Treasury yield has risen by a fair bit in the last 4 weeks. So i.e. the current increase, or I would say that the current steep rise in the US 10-year Treasury yield is equivalent to a 25 basis point hike on the Fed fund rate. So potentially, due to this narrative, the market participant is actually expecting the Fed to actually pause in December. So that actually drive the dollar weakness, which actually translate to the fact that given that the 10-year Treasury yield has started to slip again yesterday, so that actually also translate to optimism in the US stock market. So if you could see my screen over here, what we could see over here is that across this is the heat map of the S&P 500. So across the board, you see a sea of positive return, green. So the one that is most outperform is actually the bulk of the larger boxes, which is the US mega cap stocks. So within the US mega cap stocks, two of them actually starkly rose significantly, which is you all know that this pretty much famous, either infamous or famous, some of you all may call it, Nvidia, which is the major mega cap semiconductor stock that is riding on this tailwind on AI, this revolution since the early part of this year. So they are up yesterday 2.8%. So Apple is up 2.07%. So net right, during the normal US session, we start to see across the board of the benchmark US benchmark US stock indices, ranging from a return of about 2.6% to 1.8%. But later I will share you the chart of Apple. So Apple, as you all know that in US stock, they actually have after hours. That means they actually have some trading session during after the close of the normal US session at 4 a.m. Singapore, after 4 a.m. Singapore time. So that was actually driven by the fact of Apple lackluster earnings guidance. Okay, so as you know that why Apple is important, because Apple is the mega cap stock. I would say that is the number 2 biggest weightage stock on the S&P 500 now, but number 1 weightage stock on the Nasdaq 100. So their price influence could actually cascade down to the broader market sentiment. All right. So what you can see over here is that yes, even though Apple managed to beat earnings, the EPS earnings, but however, the guidance was rather lackluster. So they actually warned of sluggish holiday quarter after China slowed down, and also they say that the sale of iPad and wearable products, that means talk about the watches, are expected to suffer as well, even with challenges. iPhone, even though the iPhone sales only slightly exceed estimate, but all in all, right, what you could see over here is that the revenue year on year growth actually a drop between four consecutive quarter in terms of the growth, year on year growth softened. So that actually lead to what I call a sell off in the Apple share price after trading. It means after the normal US session in the after trading hours. So later I will show you the chart of Apple. Why? Because why is it important? Because it potentially could drive the sentiment of the Nasdaq 100. That I know that Nasdaq 100 is a high beta stock, US stock index. Further weakness on Nasdaq 100 could actually cascade down potentially into the rest of the US stock market as well. Right, so this is one of the key events that took shape yesterday. Another key event over here is the Bank of England. So this Bank of England over here is that even though they pause rates, and during that kind of statement over here is that the governor actually, okay, let me expand my screen now so you can see. All right, the governor actually insists that it's much too early to thinking about rate cuts. All right, but however, based on the fact that financial markets tends to anticipate movement much earlier, so it could be a bit rosy right now, but in the short term, it actually drive this how would I say that potential. I would say it still haven't drive that potential weakness on the sterling dollar, because due to the fact that yesterday's movement on the FX market is still primarily driven more on the US 10-year Treasury yield side of the story, where the 10-year yield actually weakened. Okay, so even though over here is that traders are now expecting based on the futures market, the interest rate market in UK on the bench, okay, pardon me, it's actually futures based on the UK short-term interest rate market. All right, so they're actually expecting 3/4 point cuts from BOE by the end of 2024. So that is much more dovish as compared to the Federal Reserve. So Federal Reserve, they're only expecting at most one cut next year. But for BOE, the market is actually pricing in at least 3/4 point cuts. So that's about 3 cuts of 25 basis point each before the end of next year. All right. So, but however, and also the fact that why they did over here is because yesterday BOE actually kind of downgrade UK growth outlook growth by 1%. So net that potentially has risen the odds of a potential uh, so-called potentially recession scenario, or perhaps could be stagflation as well in UK next year. So, but that's more of a long-term perspective. But in a short-term perspective, market doesn't buy into this UK weakness story at this point in time, but continue to drive the strength of the sterling against the dollar, due to the fact that short-term momentum right now, the sentiment is still in favor of dollar weakness. All right. So this is the key thing. Then one more key thing I'll share with you is just a while ago, uh, perhaps 9:45 p.m. Singapore time today, we have the release of a privately compiled Caixin Services PMI for out from China. So this Caixin Services PMI out from China, is compiled by a private, a private company instead of government statistical board, and a bit different from the MBS services PMI, which is compiled by the government agency. Is the Caixin Services PMI take into account of the SME, the small medium enterprise enterprises company in China. So what it did over here is that the numbers are pretty much rosy as compared to the MBS one, the one that is compiled by the government agency. It managed to inch up slightly higher, only slightly higher above last month 50.2. So they came in at 50.4. So if you look at the trend of the Caixin manufacturing PMI for October, it's still kind of stable over here. So this is kind of a second consecutive month of a slight improvement in growth. Not remarkable, but slight, all right? But all in all, market actually look at this in a rather positive fashion and build up the China stock market and its proxy, the Hang Seng Index at this point in time. Okay, so later we'll take a look at the technicals of the Hang Seng Index, which is the Hong Kong 33 Index that we cover in our platform. Okay, so all in all, right, key data to watch out for today, as we go along the head towards the European session, is key data will be this US non-farm payroll data. All right, so US non-farm payroll data this few months has been pretty erratic. I would say erratic. Why? Because previously market is expecting about around 180k, but the market surpassed expectation of 336k. So this time around, market is actually pricing in a lower figure again at 180k, and despite the fact that if you look at the trend of the non-farm payroll data, so they do expect that last month was a outlier. All right, so but we know that economic data they could be potentially surprised to the upside or the downside. So given the fact that market now is pricing rather low 180k 180k job increases, way below July and August, and in fact is the lowest since the start of this year, with the acceptance of the outlier in May at 105. So that potentially, right, market could beat very easily on the upside. All right, so if we start to beat on the upside very easily, I mean, if we start to come in at around 220k, that could actually put on the gears for the Fed to actually remain much more on the hawkish side rather than the dovish side. So with that, potentially, right, that could actually kickstart another we call it an increase or recovery in the US 10-year Treasury yield, and that could see a bit of volatile movement on the FX market in short term and weakness on the benchmark US stock indices. Why? Because if you look at the current situation right now, the US government bond yield, okay, right now is coming close to inside this 50-day moving average, I think, as a support level at 4.55%. Okay, so the catalyst for definitely for a recovery on the 10-year US Treasury yield will be pretty much driven by what we are actually what potentially could happen in the non-farm payroll data that is out later at Singapore time. Let me have the exact timing again. 8:30 p.m. Pardon me, it's 8:30 p.m. All right. So with that, let us now take a look at the short-term technical outlook on the various asset classes. So let's start with the index first, right? Since just now we mentioned about Apple. Okay, so with that, let me hide myself so that you all could focus more on the screen instead. Okay, so now let's take a look at the stock of Apple. So this is Apple over here based on my trading view. So the good thing about trading view is that I could call up very easily any public listed instrument. Okay, that is available on major exchanges. So I could see obviously that Apple yesterday during the normal US session gap up. So this was a kind of a residual optimism exposed FOMC. All right, but where it stopped over here, it stopped right at the slightly above the 50-day moving average, but right below this medium-term descending trend line that is in place since end of July this year. Okay, it gap up. Then what you could see over here is that during the after hours, if I go to the hourly chart, you could see a big reversal candlestick, a major reversal right at this resistance at 177.58. So right now, right, it's actually toggling back at the 200-day moving average. Okay, so let me plot the chart again. Let me show you what do I mean by this. So this is the after hours trading session. All right, that means after the close of the normal US session. So right now it closed right at the 200-day moving average, 171.53. So if I go back to the daily chart over here, so I could see that very likelihood, right, during the normal US session, it could potentially gap down at the start of the US to retest the 200-day moving average. So from there, right, if price action cannot sustain at this 200-day moving average and starts to inch much lower, that could potentially translate to further weakness on the Nasdaq 100, Like I say, why? Because Apple is a top weighted stock, number one weighted stock in the Nasdaq 100. That means it has the highest weight, and that could potentially cascade down to the rest of the indices in terms of the sentiment feedback loop. All right, so something to pretty much aware of, given the fact that we start to see this kind of sharp reversal. So just imagine that the price just turned down from here. Okay, so that could actually happen. Why? Because still remember about 1.5 weeks ago, we see a similar fate on one of the mega tech stock, which is the Google Alphabet, also shows similar price action, and that lead to that fall on the Nasdaq 100 last week. Okay, so now back with that. So with that, having that in mind, right now let's take a look at the Nasdaq 100. So go to the Nasdaq 100 over here. So Nasdaq 100, right? Yesterday, what we did is that we have this pivotal resistance level at 14,970, which is no change. Why? Because it's now right below this level, which is the 50-day moving average, confluencing with the pullback resistance of a former major ascending trend line from December 2022 low. Okay, 22 low. So what you could see over here, right, the stochastic 433, right, also start to flash out a bearish divergence. Okay, at the overbought level. So I'll be still maintaining the bearish bias, at least in short term, on the Nasdaq 100 as long as 14,970 is not surpassed to the upside. So first support level to look out for will definitely for sure the 20-day moving average, 14,780, then followed by this yesterday's European session low at 14,700. So a break below 14,700, then we could actually increase the probability of a further slide to at least retest this breakout level during the FOMC session. Yes, Wednesday, okay, at 14,420. Okay, so however, if we start to see an hourly close above 14,970, then this counter trend rebound could potentially extend to retest that medium-term descending trend line resistance. Also confluence with the minor swing high of 13th of October and 17th October, acting as a resistance at 15,225, this level over here. Okay, so that's for the Nasdaq 100. So now moving on next with another benchmark US stock indices will be the Dow Jones. So for the Dow Jones, right, it's going to go much higher, so slightly surpass the 200-day moving average, but still below the 50-day moving average. So what I could see over here is that the RSI is kind of at an extreme overbought level. So what I could do over here is that I'll be using this 34,090 as my key short-term pivotal resistance for today, because price action is coming very close to this resistance level, which is the minor swing high of 16th of October and 18th of October. And if I do the Fibo retracement, it's also close to the 50% retracement of this entire down move from the high of July all the way down to end of October. Okay, so pretty much a significant level to watch out for. So but however, the first support I'll be looking at will be at 32,560 only. Then if I start to see a breakdown below, then we could see 32,270, which is close to yesterday's European session low at the 220-day moving average. So we need to see a very clear hourly close below 32,270, this level here. Then potentially the odds will start to increase to see another start of kind of an impulsive down move as well. So this 32,270 is kind of a downside trigger level for a longer term bearish scenario. Why? Because if you look at the trend line here, it's also confluence with this minor ascending trend line linking the lows of 28th of October and 1st of November. All right, so but however, 34,090 taken up, potentially squeeze up to test that descending channel resistance at 34,430. Okay, so that descending channel resistance is drawn from the high of July. Okay, so that is the US Wall Street 30 outlook. So now moving on next very quickly will be the Hang Seng. Okay, so from the Hang Seng over here, what I could see over here is that yesterday we have a bearish bias to play within that sideways range below this 17,540, looking for a push down to 16,980. So given the fact that this morning the price reacted positively, likelihood to be reinforced by that much more rosy Caixin Services PMI data from October, which I highlighted earlier on the numbers at the start. So, and also clearing above the 20-day moving average, giving a bit of what I call technical momentum, short-term technical momentum trigger coming into the picture. So with that, right, potentially right now there could be a further upward movement on the Hong Kong 33 to retest, at least in short term, this minor congestion area here at 17,870. We also confluence very closely to the 50-day moving average. All right, so I'll be using this yesterday's US session low, which is 17,375, this area here, as my very tight key short-term pivotal support level, looking for that potential push up, because at the end of the day, right, if this level don't hold, right, immediately we may start to see another choppy move to hit down to retest the lower limit of that range, minor range support level at 16,980/16,800. All right. So, but however, right, if you this is an hourly chart, but something I want to share with you all is what is taking shape over here in the bigger picture, right? This bigger picture over here, right? This level here, if you look at the current movement, this is a daily chart. So if you look at the bigger picture here, is that it seems to us that in the last couple of sessions, since the low of 3rd of October all the way the low of 24th of October, which is the 16, this is where I derived that 16,800 level, pretty key. So this is what I call a very expanding wedge configuration. As you can see, I draw the upper limit of these two gray color line. And all in all, right, if you zoom into the area of March last year, it could still be a potential bullish reversal, very long-term major inverse head and shoulder. And also, if you look at the MACD, is being supported level. And if you look at the price action of the MACD in the last few sessions, it started to slope upwards. A very clear sign of a longer-term bullish, we call it divergence, is taking place on the Hang Seng index. So potentially our market right now is actually pricing. You know that market is always forward looking, right? So market seems to be pricing in potentially could be more physical stimulus coming up from China that could actually increase liquidity in the China financial system. So that could actually be one of the reasons that indirectly drive this Hong Kong 33, or subsequently potentially what we could see over here next year, the Fed will be potentially on hold. And given the fact that if it's on hold, the Hong Kong interest rate will be facing less pressure of going upwards, because you know that the Hong Kong currency is pegged with the USD. So with the Fed getting less hawkish next year, there's lower chances of, or in fact zero chances of the Hong Kong rate to inch up much further, because given the fixed peg that Hong Kong dollar needs to have with the US dollar. So that could potentially be driving the longer term picture of the Hang Seng index that is being depicted in my technical analysis chart. Okay, so that's more of the long term basis. So now let's take a look at the FX market right now. So on the FX market, right, very quickly, let's look at, let us start with the euro, the main currency first, the euro dollar. Okay, so if you look at the euro dollar, right, yesterday we have this short-term bullish bias, which is at 10520. So that's a very clear minor swing low of 26th of October and 2nd of November that's being supported. So it's still going to play around that the 50-day moving average about a whipsaw. So right now you start to see a series of higher low that's being formed, but there's a range top at 1.0685 over here. Okay, previously range top that is in place since 24th of October. So we are still looking for this level to break before we could see a substantial movement up in the euro dollar to test it 1.0735/1.0760. So given the fact that the last few days of movement is pretty volatile, right? You look at the price, the way it swing down, it swing up, swing out, swing down, swing up. So the movement of what I call is very sharp in the last few days. So I do not want to have a very tight short-term pivotal support at this 1.09 level. So I still maintain at 1.0520. So as long as this level holds, potentially we could see another test at 1.0685. But however, if we start to see a breakdown below 1.0520, so for sure the odds will increase to see another round of what you call that dollar strength coming into the FX market, for the euro dollar to see further weakness to the next support at in short term at 1.049, 1.045 level, which is this level over here. All right, so now moving on, next will be the sterling dollar. So the sterling dollar over here is yesterday movement is pretty lackluster. Yeah, it's going to shape a higher high in short term and higher low. All right, and the RSI still continue to hold above the 50 level mark on the hourly. So what we could do over here is that like I said, there's a near-term support level at 120.60 level, 121.60. So I don't want to tie it so tight at 121.60. So still maintaining yesterday's short-term pivotal support at 120.95. So still looking for that push up towards 122.85 potentially. This minor swing high of 24th of October, and as well is a range of 122.85 slash 123.30, which also confluence with the 50-day moving average that is still acting as a resistance. So however, if we start to see hourly close below 120.95, then these bullish buyers will be invalidated to see the continuation of the impulsive down move towards the next support at 120.80. A break below take us down much lower towards 119.80 on the sterling dollar. Okay, so now moving on will be the Aussie dollar. So let me share something very interesting about the Aussie dollar is previously, right, we did highlight Aussie dollar on before the Fed meeting on Tuesday. Yeah, Tuesday, looking for that potential last push down within this impending, this is a daily chart of the Aussie dollar, looking for that last push down on that impending descending wedge that is still forming. But instead of showing that last push down, the Aussie dollar surpassed the wedge resistance at 63.95 over here, and the RSI also hitting above the 50 level. So all in all, what it means that given the fact that this is a descending wedge will only tend to be formed towards the end of a substantial medium-term downtrend, because this is a daily chart. So what we could see right now, right, this Aussie dollar potentially in a longer-term perspective, that means from the medium-term perspective, what might be medium-term, we talk about 1 to 3 months perspective. That means it could be potentially forming a medium-term basing formation. So this could be a double bottom, first bottom, second bottom. For sure, the top of the resistance will be at 69 figure level. All right, but before talk about 69 figure level, there is another resistance at 65.95, which is the 200-day moving average. But we know that given the fact that from the level or this current price level to the 200-day moving average, there could be still some more of potential movement, at least in the minor shorter term. Okay, so with that, right, we could actually start to be much more bullish right now in the shorter term. So if you look at the hourly candle or the hourly chart of the Aussie dollar, over here, so what we could see over here is that this is the pullback line of that former descending wedge resistance. Now turns the pullback support is a zone. Slightly above it is the 50-day moving average, also acting as a support. So it's a zone between 63.90 slash 63.75. So I will use the lower limit at 63.75. So as long as this 63.75 figure level, 63.75 key short-term pivotal resistance is key short-term pivotal support, okay, pardon me, is not surpassed to the downside, that means no hourly close below it, potentially the Aussie dollar could see further push up to at least test this 30th of August and 20th of September minor swing high area in first step first at 65.10. All right, but however, if we start to see a breakdown below 63.75, then this is considered as a failure bullish breakout, and potentially the Aussie dollar could start to shape that another choppy down move to retest the lower limit of the range at 63.20 in first step first, then followed by 62.70 slash 62.60. All right, so that's for the Aussie dollar. So lastly, right, the all important the most fascinated, okay, dollar yen. All right, so because the fact that dollar yen right now, there's a lot of choppy movement going on, given the fact that also BOJ is the one of the only major central bank that has negative interest rate. So the dollar yen right now is actually right now moving in line with the broad-based dollar sell-off that is seen in the last 2 days. So for sure, where it sell off, technically it sold off right at the 51.95 key resistance, key major resistance level, which is the intervention level last year. And if you look at the RSI, continue to inch down much lower, but still holding above the 50 level. Price action still holding above the 50-day, 20-day moving average, which is at 49.30. Okay, but that means it got to see the 49.30 clearly taken out, then potentially we could see much more substantial movement, at least from a multi-week to multi-day perspective, to test the next key support level at 144.80, which is the descending, it's an ascending channel, major ascending, pardon me, this ascending channel support level that is in place since March this year. All right, so if you look at the shorter term perspective over here, okay, shorter term perspective right now on the dollar yen, yesterday we were bearish below 51.25, almost hit that 49.80 support level that we highlighted. So what we could do over here is that the dollar yen in Asia session, yesterday it did a bounce, so Asia session it dipped down much lower. So given the fact that over here, right, there could be a bit of a snapback rally. All right, it paused at around the 50% to the 61.8%. So the 50% is at correspond to the former swing high area, at 150.80. So potentially there could be some kind of snapback around this zone over here. So potentially, right, I would not want to tighten it so tight, the short-term pivotal resistance. So still maintain it at 51.25. A break below 49.80, right, potentially at least in the short term could retest this swing low area of 31st of October at 148.90, which is a pretty clear minor support level. But however, a breakup above 51.25, then we could see another choppy push up to test that major resistance at 151.95. All right, so that's for the dollar yen. So now let's move on to the gold itself, which is the commodity markets. So for XAU/USD, almost sideways for the last 2 days ex post FOMC. So what we could see over here, price going to move sideways, but start to shape a higher low. Okay, higher low, and right now another higher low during the Asia session as well. So for sure 1974 will continue to be our short-term pivotal support to maintain this bullish outlook, short-term bullish outlook on the gold, spot gold, XAU/USD. First resistance to watch for sure will be the 2006 level that has been tested twice last Friday and as well as this Tuesday. Only a clear breakout, I would say, that hourly close above 2006 could increase the odds to see another leg of impulsive up move to test the next resistance at 2028, 2037. So, but however, if we start to say hourly close below 1974, then we could start to see a much more substantial pullback to retrace this impulsive up move that is in place since 6th of October to seek a test on the 200-day moving average, and as well as the 20-day moving average confluencing with this support zone at 1932/1920 level, which also, if you look at the Fibo retracement, okay, is the 38.2%. All right, so with that, that's for gold. So a bit of optimism coming towards the oil price. So the West Texas oil, West Texas oil, so we could see over here is that price starts to stall at last Thursday. Thursday they formed a 2 minor swing low at 81.60, and where it formed at this 81.60 is the RSI, the hourly RSI starts to shape this bullish divergence. Okay, so you need to ask that, right, at this moment in time, that downside momentum seems to be easing at this point now, and also the price starts to actually doing Asia session right now pierce above this minor descending channel that was in place for, on 20th of October high. So all in all, what we could see is we could start to see a bit of recovery in oil price potentially. So for today, right, I will flip to a neutral stance. That means a kind of a range bound trading for today at 84.58. 84.58 over here, followed by for sure yesterday's minus swing low, or we call it a minus swing low level at 81.16. All right. So unless we start to see a clear breakout above 84.58, then potentially we could actually validate a further push up to seek a retest at the 50-day moving average, and also very clearly this graphical resistance level or graphical congestion level at 87 figure level for oil. Then a breakdown below 81.16, then see that residual push down to test the key support at 78.70, which is conversing with the 200-day moving average, and as well as the swing low of 22nd and 23rd of August. Okay, so all in all, right, if oil prices going to actually pierce up above 84.58, that could actually start to increase inflationary expectation. So that could actually also add further downside pressure on this equity prices as well, given the fact that the US Federal Reserve also concerned about future inflationary expectation. All right, so inflation expectation, one of the primary driver is actually oil prices. Okay, so with that, have a great day ahead, and I wish you all a good weekend, and we shall speak again on next Monday. Thank you.